Hi, I'm Christina Robinson, and welcome to another edition of CMS Forex News. Today is Friday, November 30th, 2007. Last evening, Fed Chairman Bernanke gave U.S. markets a spark by signaling that another rate cut may be necessary as a result of revived financial turmoil. The housing recession and credit conditions can get worse if the bank does not change rate policies. Prospects of a rate cut boosted investor confidence and sent the yen lower. The dollar built on its gains from earlier in the week. The dollar-yen pair has advanced 250 pips from the week's open and has moved 370 pips from the low set during the Monday session. After falling close to 300 pips yesterday as a result of poor UK housing data, the British pound managed to regain its losses against the yen today. The pair is up around 500 pips for the week, pairing some of the losses from earlier in the month. The dollar continued its advance against the euro and pound as the cost to borrow euros for 3 months rose to a 6-year high. Credit costs have tightened in the last 2 weeks as banks intensified concerns about funding at the end of the year. Lending between banks has slackened, and the European and British central banks have both offered longer repayment terms to help ease the credit markets. Against the greenback, the euro fell by 120 pips in New York trading and is off about 300 pips from last Friday's record high. Now let's take a look at today's fundamental releases. Tokyo's consumer prices in November showed an increase of 0.3%, but when energy and food was taken out of the equation, it fell 0.1%. This type of data does not give the Bank of Japan much to work with in terms of being able to normalize interest rates. Manufacturing in Japan rebounded above the boom-bust level in November, posting a 50.8 measure. In a separate release, housing starts in Japan was a dramatic 35% lower in October compared to the same month last year. This is the 4th straight month where annual housing starts came in lower than the previous years. In Switzerland, GDP for the third quarter increased by 0.8% and 2.9% year over year. The results were higher than what economists had expected. A second release showed Swiss CPI increased 0.5% in November, pushing the year-over-year number to 1.8%. This info may be a cause for concern for the Swiss Central Bank after it already acted this year to try and curb inflation. In Germany, retail sales data showed the biggest drop in 3 years, falling 3.3% in October. Higher energy and food costs and the expectation that more inflation was coming were blamed for eroding consumers' purchasing power. The Eurozone CPI jumped to 3% on a year-over-year basis, putting the European Central Bank in a quagmire as it now needs to battle inflation at a time when credit conditions and slower growth call for a rate reduction. Canada's GDP slowed down in the third quarter. The economy grew at an annualized rate of 2.9% compared to a 3.8% growth projected in the second quarter. The number did beat expectations of an even further drop, which may help ease pressure for a rate cut from the Bank of Canada, which meets next week. And finally, in the U.S., personal income grew at the slowest pace in 6 months, climbing only 0.2%. With higher gasoline prices, the housing slump, and reduced access to credit, consumer spending grew at a slower pace than expected as well. Next week, 4 central banks will meet: Australia, Canada, Britain, and the Eurozone. The week will also be filled with manufacturing and services data for the month of November. And that's it for today's news. Join us again next week at cmsfx.com.